Hi, folks. This is Sean Hyman from the Logical Investor newsletter. And I just wanted to alert you that the latest newsletter is out as of a day or two ago. So if you got your alerts on in the premium newsletter section, you already are aware. But just in case you don't, I want to make sure you're aware. So the May 2019 newsletter is out. I don't have a recommendation in it because I want us holding our cash for averaging down points. I talk some about some of the philosophies and things I picked up from Warren Buffett through the years. And then I also go through and talk about different crucial levels on the Dow, the S&P, the NASDAQ, the Russell 2000, and the Dow Jones Transportation Average. So we are at very crucial areas in those indices. And so, I just figured it was time to talk about them and to give you my thoughts. So for those who are ignorant of what's to come, it will be worrisome times for them. For those who are value investors and who are aware of what's to come, it's exciting times for us. And so because with market corrections or when you get value, when you get averaging down opportunities, when people misjudge the market and stocks the most, which provides the most opportunity for value because they're the difference between what something should be priced at and what they will be pricing it at, there will be a big distortion which produces the big pocket of value. And so don't look at it the way the average person does. Oh, if the market goes down, it's bad. If the market goes up, it's good. No, if the market goes down, for those of us who are prepared, who are buying solid companies, and who have cash on the sidelines, it's a great thing. So the market, as looking at the S&P 500, still really has a challenge with this 2900, 2950 area. It's hit it several times and been rejected. The RSI continues to slump over. The MACD continues to slump over as well, and you're starting to see selling volume spikes, which again is not a good thing. There's still a big disparity between where the price is and the 200-week moving average. I expect that not only will it go down to the moving average, but it will far surpass that moving average by quite a degree. So, and I still think it could go anywhere into the 1400 to 1900 area. Does it have to go that far? No, it does not. But with one of the longest running bull markets in history, and you've got a ton of participants in that bull market, you've got people that are more leveraged now than the previous crashes of 2000 and 2008, and they're very lax. They are not looking for the rally to end because they get more confident the more something goes on, and they think the more it goes on, the more it is apt to continue on, when really the exact opposite is true. So the market is at a very crucial point on the daily chart. It's right at the 200-day moving average, which is flat. So it would be a lot more bullish for the market if it was still continuing higher like what it was here. But it's flat, so there's a huge chance that it breaks it. And again, it could bounce up before it breaks it, or it could just go right to breaking it, and nobody knows ahead of time. So this could do something like come up here around the 50-day moving average area or a little above it, and then head on lower. And obviously it wouldn't be just a straight drop. There would be zigzags up and down along the way, or of course we could just drop right through it and head lower. So this one would scare people the most. This would suck a lot more people back into bullish trades. That was my wife calling in. It's her birthday today, so we'll be going and celebrating her birthday here in a little bit. And so I'll be running through this as quick as I can to get through what we need to so I can go celebrate her. So the S&P 500, again, it's overvalued. It's bearish. There's a lot of economic indicators that have been slumping, and there's a lot of companies that have been missing earnings and talking about how the trade war is affecting them, and even some that haven't been affected yet, they are projecting in the future that it will affect them, and so that's going to put a slump on earnings. And even if you didn't have all that, the market's overvalued anyway. So it's going to come down. It's just a matter of when. And of course, we've already seen part of that. We've already seen the first round of sell-off, and I believe we are around the corner from the next round of sell-off. So that means it's a good day to be an owner of gold. Gold has been consolidating a bit, and which is fine. It's kind of formed somewhat of a base right in here, right at its rising 200-day moving average. So the S&P 500 has a flat 200. This one's turning up to an increasing 200-day moving average. This one's had its three-wave pullback, and I believe is likely starting its next move up right in here. Again, I can't say for sure, but it's got an increasing RSI, increasing 200-day moving average. Three-wave pullback has already unfolded, and so if it hadn't started it yet, it would likely start it fairly soon. So looking for those kind of scenarios, and then the MACD is heading higher. The selling volume in GLD continues to lessen, so all kinds of bullish signals there, and I'm very pleased with us owning GLD here. And then FXB, of course, been very volatile. It's still higher than its lows here, and these lows are higher than its ultimate lows back in I think it was 2016. So yeah, latter part of 2016, we were at 117.48. Here we're at 121.10, and lately we're at 122.32. So this being A, B, C, this being wave 1, this being wave 2. We don't know 100% sure if 2 is completed yet. It's probably completed here. If this holds above here, then 2 is completed, and we're on into 3. If not, if it goes lower, then we'd be looking for these lows to hold right here. With massive selling here, and even a bit here, I believe pretty much everybody who's going to sell out of the British pound has already done so, which makes me tremendously bullish on the British pound. So I'm looking for it to go much higher over time. And so EWW has been interesting. This one has been acting very defensive. Even when the market was selling off here the last couple of days, it was actually rebounding back. And this one could be about to start its next leg higher. It closed above this corrective line here. So we've rallied up, corrected, and ultimately I believe we're getting ready to go higher. But again, could we head lower before heading higher? Of course we could. I do like it that the RSI is heading higher. The MACD has been heading higher as well. The selling volume has continued to taper off, so lots of bullish things there. So I'm very, very bullish on EWW. Then we've got GDX. Of course, if I'm bullish on gold, I'm bullish on GDX, and it's been doing the same thing that gold itself has been doing. It's been consolidating right around its 200-day moving average, using that as support. And sooner or later, this is getting ready to break out. It's kind of squeezing in kind of a somewhat of a triangular fashion, and that will break out soon. Triangles, you never know if they break out to the downside or the upside, but in the light of the market that we're in, and with a bullish bias on gold, I believe that upside breakout is likely here. So I'm looking for this to happen. However, if this happened and then this happened, I'm fine with that scenario too. So that wouldn't surprise me at all. You've got RSI's been picking up steam. MACD's been picking up steam. It has recently broken a downtrend line. The peak in selling was from about here and here. These were fairly equal, this one being slightly higher, but then the selling has dropped off quite a bit, with even most of the selling being much lower, except for this one little spike here. So the selling has dropped off a ton. You got your golden cross. The 200-day has gone from downward to flat. So I believe this is getting ready to head higher. So I'm looking for this next nice up move. Had an option on that I had done personally that had worked out well on that one. So buying it towards the 200-day moving average in the bottom Bollinger Band. And so LPL, actually I think instead of a buy, I believe it was a sold put, if I remember correctly, under the bottom Bollinger Band. So LPL basically is right at about you could probably call that about a double bottom if this halts here. And again, we don't know for sure if this halts here, but if so, you've basically got roughly a double bottom there. You've got a buy signal here. You've got your selling volume continues to taper off big time. So even though this happened, the selling volume is so much more muted, which is actually bullish. The RSI has come out of oversold, which is bullish. So again, I'm looking for that to have a nice rebound higher, and I believe it has been overshot and overplayed to the downside. You can always count on market participants to overshoot to the downside and to the upside in market. Actually stopped and went to Lisa's birthday party and resuming this video. I think the first time I've ever paused in the middle of one, but it was for a good cause, my wife's 53rd birthday. So anyway, on Bed Bath & Beyond, still very bullish on it. You got a golden cross here, three-way pullback. That three-way pullback is long in the tooth. It probably is almost over, I would think. And so I'm looking for it to have a rebound, but could it go a bit further before heading north? Of course, anything like that's possible. We are deeply oversold here. We are deeply oversold here with this flattening out, so we're probably getting closer to this heading back this way. And so if so, that means that would be coming closer to a buy signal. Notice your one of maximum pessimism was right back there. Then its second highest point was here, because these are buy spikes, and then it dropped off big time after that. So the selling is dissipating big time. So it's a very good sign for Bed Bath & Beyond. But with trade wars and stuff like that and everything, you can have companies get overly beaten down because of the prevailing thought or the prevailing fear of the moment. But it's just it's just overdone. And so I'm looking for that to head back higher. Again, very bullish on that. I know some of you are out of Bed Bath & Beyond because you had averaged down low enough to where you were able to get decent returns and get out of it, but I know everybody is not, so we are still officially in that one. And then we go to CAJ, which is Canon, and this one has been holding up relatively well given the way the overall market has been doing recently. So it had its run up and then a swift correction and then another run up and then a milder correction. But so far anyway, and again, could it correct further? It could, but so far it's putting in higher lows here, which is bullish. The RSI is strengthening. The MACD has been strengthening for a bit now. You see there, your point of maximum pessimism was right here. Then here was your next biggest point of maximum pessimism, and then it dropped off big time from there. So that's a very bullish sign when the sellers have likely been wrung out and the seller just drops back off. So it makes it a lot easier for the bulls, the buyers, to take back control. So very bullish on that one. Then we've got IBM, Big Blue. This one is doing just like I told you it was likely to do. I said, hey, this thing ran up nicely and with almost no reprieve anywhere in it. And so I said, anytime something does this, that when there's a volatile up mood, expect that it doesn't just change its personality instantly. Expect a volatile down move that can be a fairly sizable correction. And so I said, the people that are just thinking this is just going to keep going up without any kind of reprieve or correction, they're just sadly mistaken. So we have a three-way pullback here. Question is, does it end here, or does it go quite a bit deeper before heading higher? We don't know, and it doesn't matter because we will ultimately see it rise to higher highs. What is nice is the RSI is more bullish. The MACD has increased from its ultimate lows, and then your point of maximum pessimism on the daily chart was here, and then your second biggest point is here, and then it's dropped off significantly from there, which is another good sign. So very bullish on IBM, and again, it's got its golden cross. This went from down to flat. I'm looking for that to head higher overall, but could it pull back more in the interim? Sure, it could. Anything's possible. Well, let me get this typed in right. KHC. So if you'll remember, when a couple of videos ago, I'll get it out here in a second, in at least a couple of the last 3 or 4 videos, I drew out probable scenarios. I said this could drop and go sideways and could head higher, but I said it also wouldn't be unusual if it did this and went lower and had one last hurrah, to the downside, so to speak, before heading higher. So that's what we've got right now, is that second scenario. It's the final washout. Anybody who is second guessing or going to hop out or whatever, this is the time they'll do it. This is when most people got out right here, obviously. And this sell-off, even though it went to new lows, is a fraction of what this is. So that's actually a bullish sign when there's that big of a distinction between the selling there. You see this, this histogram here was much deeper there than here. So the RSI is deeply oversold. So it's not that this has to stop right here where it is. Could it go down a bit further before heading higher? Absolutely, it could. So just note, but that was one of the scenarios that I traced out for you. So that's why it's important for you to follow the weekly videos, because what I draw out what tends to be the most likely scenarios. So this one has no emotional or mental preparation needed for it at all whatsoever. So that one just sort of takes care of itself. But the ones that can have one more dip and then up, or a deeper dip and then up, that's the ones that you have to set proper expectations for. If your expectations are set properly, there's not fear, there's not worry, there's not frustration, because all those things come from misaligned expectations. So if you're experiencing any of those things, then maybe not consciously, but subconsciously, you were expecting this move and you weren't even accounting for these possibilities, even though I've literally drawn them out on the chart for you. So just make sure you're kind of doing your little mental checklist and thinking that through and really asking yourself, have I really thought that through? And have I been expecting the possibility of what Sean's been saying? And because when I draw those things out, those dip possibilities and how they may go, they are as likely a possibility as just the correction being ended and going almost straight up from there. So just realize that's normal market mechanics, nothing unusual there. ENI, ticker symbol E. So we had our run up from 28s to 35s, And so it was time for a correction. So we've gotten that. Corrections tend to, rarely they'll go about a third back, but more commonly they go about 50%. Well, I don't know. I'd say the 1/3 corrections are common as well. But so you typically have either about a third of them move back, and I'm not measuring this, but just guessing here, or 50% move back, which again I'm not measuring it. I'm just guessing at it just by looking at it, or a roughly a 66% move back in heading higher. And on rare occasions, you'll have the double bottom. Those don't happen all that much, but they do happen here and there. They happen less likely than all these others typically. And so these are your more likely scenarios. We've already blown through several of them. So the 2/3 or so to the full double bottom is likely what we're looking at there. And if you're wondering where those rough estimations come from, they're Fibonacci ratios, and I'm rounding those some because the exact Fibonacci ratios are not those exact numbers that I gave, but they're close enough for government work, and they're the easiest to remember that way. So, and while I don't draw Fibonacci retracements and all that kind of stuff, just the pullbacks, so the three-way pullbacks tend to coincide with some of those. So that's how I know about how far things typically move. And of course, this being an oil stock, commodity stock, it tends to have more exaggerated moves than just your average typical stock. So these deeper pullbacks are nothing unusual for them. One thing I do note is that so far the MACD is higher, which is good. The point of maximum pessimism was back here, then it dropped off to here, and then now we're dropped off even lower. So that's all good. So again, very bullish on that. Of course, ENI pulls back with oil. Oil has had a major pullback on the thought process that if the trade war slowing the global economy down, there could be less demand for oil. But also there have been supply cutbacks as well in Iran and OPEC plus Russia, and Venezuela's having problems getting oil out. And there was somewhere else, I want to say Libya, but I might be mistaken on that. Egypt, Libya, somewhere over in there was some other shortfalls as well. So there's really, while there has and probably is being some demand cutback, you've got two other things happening that are potentially bullish for oil, which is the cutback from OPEC and other producers, and also the increase in demand from summer driving season. So that locally in the U.S., helping to counter at least some of the potential global slowdown in demand as well. And then the tightening supply helps make up some of the difference in the supply-demand imbalance so if demand comes down and supply comes down, that helps even that out more is what I'm saying. So, but you've seen oil come from 42s to 66s, and so we bought into oil after it had gotten slammed, but or oil stock after it got slammed. But to think this goes from 42 to 66 with pretty much little to no correction, we would be fooling ourselves. And yet, when if you were to listen on TV, you would think that people are shocked when there is a pullback in oil. But again, if any asset at all out there, no matter if it's oil or not, can go from 42 to 66 in this short amount of time, that big a percentage gain in that little amount of time, this or this or this, I mean, anything like this is possible and probable. So, and again, all these would, I'm looking for the trend in oil to continue higher. So we just don't know. It would not surprise me, at least if oil falls back some more and retest some of that. What I do like is the RSI is heading higher. I like it that the MACD is still heading higher overall. It may not turn here, but even if it turns here or here, 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 whatever it is, it's still higher. And we are probably in a wave 2 pullback, at least as far as the daily chart is concerned. The weekly chart's a different wave count, but here was a wave C with a lot of selling that happened in it. The wave 1 rally up, wave 2 pullback, and high selling on wave 2, which is pretty typical. So I'm looking for a bit more pullback and then heading higher on oil. And of course, I'm looking for the same thing to happen in ENI. So that's my thoughts there. And then SLV. So SLV has been a bit relentlessly lower, but it will, I believe, shoot up higher in the coming months. These areas were your points of maximum pessimism on the daily chart, at least. And then for the most part, it starts heading overall lower with the overall trajectory, something like that or that, with the exception of this one particular day in here. So that overall trend is sloping lower there. We've got a buy signal here on the MACD. We've got the histogram getting more bullish, the RSI getting more bullish. And we had this move up here, and then we've got a 3-wave pullback that is actually you would draw it like this, because this high went higher than that high by a few pennies. So that would be your wave 1 on the daily, and here's your 3-wave pullback. And we bought into the 3-wave pullback, into the C wave, but we just didn't know how far it would go. Nobody does. And so as soon as that completes, which I believe is probably just about any day now, then this should take off and head higher in the months to year or so ahead. Naturally, can it do something like that? Absolutely. Is it probably going much further lower? Is very doubtful. We will know when this move here is underway, when you connect these highs and it's closed and held above. Another bright spot will be when it tops this 50 and 200-day moving averages. Will be another one. So I believe this is our wave up, this is our corrective wave lower, and then we're getting ready to head higher. And again, this might come all the way back and double bottom. It might be kind of a 2/3 move or so and then higher, but either way, I'm very bullish on silver. It's a great place to be positioned in such an overvalued and volatile market. And then, of course, we're back in CHL. China is talking about, I saw one report of it one time, but China is talking about, in its kind of tit for tat thing on this whole trade war thing, about pulling its U.S. listings of its stock. So if it does, it could go to something like the pink sheets and trade under a different symbol. So if that happens, just know that. If by chance we get a pop up on this one in the more near term, we may be out in light of that one particular announcement. In other words, if they weren't just jacking with something, everything was going to stay the same, I wouldn't, mess with it at all. And we may not. We may, because this may or may not pop for us near term, because we didn't get into it for what it would do over the next few days, few weeks, month or two. But we are deep into a 3-wave pullback, and that's a pullback of this move here. So this was the big major move. Here is the correction of that major move, and I believe we are getting ready to head back up again. Also, I like it that the RSI continues to strengthen. I like it that the MACD is strengthening as well. I like it that your massive selling, point of maximum pessimism, was right in here, and that's dropped off like a rock ever since, which is good. So again, we exited and took our profits way up here, let it have a massive pullback before re-entering it, Again, nobody would know exactly where the bottom is, and that's why we have averagings out there. Um, the on the averaging, this probably won't show on your screen because I've got it full size, but on CHL 42 to 44 is the first range that we have there for averaging, and we are at 44.57. We've been to 44.42. So if it were to drop a bit more, and it could, then we would finally get an averaging down point on that. So just realize that. By the way, when you pull up the newsletter, the latest newsletter, you can scroll down to the portfolio section and put your cursor over the portfolio and right click on it, and you'll get a menu. This is not the menu what it'll look like because I'm on the chart, but you'll have an open in new tab, and you can click on the open in new tab, and it'll open a tab to the right of your browser, and you can keep that open, and that makes it to where you always can, at a glance, just click over to that tab and see what the averaging down points are for each stock that we're in. Also, you can take your smartphone and take a picture of that portfolio, and then when you're away from your computer, you've always got a copy of all that as well. And then any broker you're with has a smartphone app that you can use, and they'll walk you through these things. They'll walk you through the trading station desktop. They'll walk you through the online app, whatever you need. But just know that in your app store, they will have apps to where you could access your trading station, place trades, buys, sells, get quotes, check your portfolio, whatever you need, and at literally the push of a button. So make sure you've got that on your smartphone. That can be tremendously helpful as well. So again, things are we've experienced we experienced this run up in many of our positions, and we experienced the pullback in our positions, which were the corrections of these moves. And many of those positions are probably not terribly far off of their bottoms. Now, note when I give a bottom and a direction, I'm giving a direction, but not when I do that, don't assume that a bottom is a V bottom, because many times they're not. I just only have so much chart room to work with into the future, so that's why many times they look steep. But so this could correct like this, and then this could go sideways for some months, and then head up into the future. And again, it wouldn't be as steep as that likely, but that's all the room I got on the chart. So just picture that's how that can go. So don't take those literal, like, I'm looking for this massive steep run up, because when I draw these lines, that's what I see happening over the coming months to year or two. Because remember, our average holding time is 2 to 4 years. Some stocks will be a little longer than that. Most stocks will be right there in the middle of that 2 to 4 year holding period. And a few stocks will be less than that 2 to 4 year holding period, which so far has been every stock that we've sold so far in this newsletter service. But just because that's happened, don't think that is the norm. That's just how statistical type things work. It's like a bell curve. Most things will fall in the middle of it, and there will be outliers, both to both sides. That'll be a handful of something here or there. We never know ahead of time which ones are going to be the quick gainers, which ones that are going to take the longest. If we could, we'd all take short, quick gainers and not longer ones, and this and that and the other. But that's just not how true investing works. Because what you're finding points of value, and you're going to get out of it when it's not at a point of value. So be it fair valuation or overvaluation. But the problem is that market participants have to realize that value and start bidding it up and buying it up to get it out of that state of value. So that can take a little bit. On rare occasions, that can take weeks or months. More typical is it could take years. If we didn't have our system and you were just investing on your own and trying to pick good stocks and holding on to them, without our fundamental technical and sentiment analysis, you would be looking at typically 5 to 10 year time frames of needing to hold most all your positions. Um, because of our system of fundamentals, technicals, and sentiment, we have crunched that 5 to 10 year period down to 2 to 4 year period. But still, true investing takes time. It takes time for them to make products. It takes time for them to sell products. It takes time for them to create services and deliver services and to take in the earnings for those services and to put some of the money made back into the business to further grow it. And so that all takes time. If you've ever run your own small business, and even though it may be on a smaller scale, it takes time to grow that company financially. There's nothing instant about it. So it's typically the same way with stocks. You'll see TV shows on financial TV that act like there's quick money and fast money and mad money and all kinds of crazy stuff like that. But that's just good for ratings. It's good for entertainment. It's good for sizzle. Um, it sells. It gets eyeballs, stuff like that. But real investing uh, does take time. These guys don't have a secret sauce to where they're just, if they were making the type of gains they talk about on a, consistent daily, weekly, or monthly basis, they would be Bill Gates in no time. Um, all those professionals are in the same boat, whether they uh, act like it or not. Some of them will just be honest and talk like it, which doesn't have as much sizzle and doesn't sell quite as much. And others will, be hype artists and try to play to the emotional side to get you hyped up, worked up, and it's just unfortunately how a lot of that works. I just never bought much into that. I would rather have the more of a Warren Buffett, Charlie Munger, very level-headed, down to earth, uh, explain things easily, don't have a bunch of hype and sales pitch in it, and it just teach you and show you what real world investing really is like. And yes, it's not as sexy, and it's not for emotional highs. We invest to increase wealth over time and to steward what we have over time. So it's not for the thrills. It's not our casino. It's not our place to gamble. We're not speculating. We're investing in real companies, huge companies that make real products, deliver real services, that hire real people, that make earnings for themselves, for the shareholders. They provide something that the world needs or wants, and helps make this world go around. So, and we do that in a very prudent, methodical way, and that's why we are investors and not speculators. You see, some people will just invest in anything just because it's going up, and they don't even know why they're invested in it. It's what happened with your Bitcoin people when Bitcoin was in a bubble and shot up to 18,000, and then they got stuck in it when it went from 18,000 to 3,000. And so they were speculating. They were gamblers. They probably don't see themselves that way, but they were, and because they were chasing price, they were playing off the greater fool theory, which means that when you buy high, there needs to be a greater fool than you to take it off your hands at an even higher price. And sooner or later, that game runs out. And when it does, everybody heads for the exits all at once. And that's why something can go from 18,000 to 3,000 in not that long of a time. And they want to call it a currency when even the US dollar is not that unstable. And they want to call it a payment system. And it processes payments so slowly that Visa and MasterCard run circles around it. And even at some crypto conferences, they'll take credit cards for that reason, and sometimes won't even take crypto for it because it processes orders so slowly. So it's not a good payment system. It's not a good currency. Um, it's not widely used enough for anything. So what is it? It's a speculation tool, and it's also speculation because people are just chasing price and nobody knows how to properly value it. What's the proper value for a Bitcoin? They can't tell you. Um, the only thing you can sort of go at it at is there's a cost of what it takes to produce one uh, profitably, but um, that's at about $4,500 to $5,500 a coin depending on where you're producing it at and what your energy costs are. Well, we've already seen it go to $3,000, and sure, it's bounced back more recently some, and it's pulling back off those highs even. But so it can go far below the cost of production, and they can run losses even for a while and even producing them. So you can't even use that even as an ironclad measure of value. So that's a lot of the difference between when you know if somebody's speculating or investing. Can you nail a fair valuation for it? Is there a real world use for it in the world? Do you have a system that tells you when it's undervalued or overvalued? Is it something real? Does it make something that the world really has to have or need or want? Are you chasing price, or is there a system? Are you willing to be in something for some years and you have confidence in it and what it does, or are you just in it for a momentum move, buy high, sell higher? If you're the latter, then you're a speculator and a gambler, and if you're the former, then you are a true investor, and that's the difference. Okay, thanks so much for watching, and God bless. Bye bye.